Hi, welcome to Let's Talk Real Estate. I'm your host, Charlie Flannery, and my guests today are two local businesswomen, Maria Gooch-Smith.
How are you?
And Laurie
Driscoll.
Laurie Driscoll, because she got married recently.
Well, that's right.
Right, you know.
Sorry.
And they're both with the SEED Corporation, SEED.com. And tell me a little bit about some of the stuff you do. How long has SEED been in existence?
Okay. Well, SEED Corporation is a nonprofit corporation, and we've been in business since 1982. This is our 29th year. And our mission is to provide financial and small business technical assistance to start-up businesses that are growing, creating new jobs. We're basically an economic development corporation, and so our goal is really job creation in southeastern Massachusetts, mainly.
We need that.
Yes.
We really need that. And what's your function over there, Laurie?
I am a commercial loan officer, and I look at loan requests that come into the office up to $200,000. Do the underwriting, the review, the analysis, the underwriting, and closing the loans as well.
All right. And you have several programs that you offer,
right,
that you guys participate in.
Right.
And what would you say the biggest one is? The 504 program?
Yes, the 504 program is our largest program, and it really is designed for those businesses that are now in their phase. And I like to think of businesses almost like a baby growing up. You get to the phase where you can actually have your own space, you want to buy your building, or you need to expand an existing building because you're growing. And the 504 program is just a very attractive way to finance buildings and also heavy machinery and equipment. If you need machinery and equipment with a life of 10 years or more, like a printing company, it's a great way to finance that because the interest rates are lower. They're fixed. Right now they're 5.7, fixed for 20 years. And they make it easier also for a small business to finance their building because if the business was going to a bank alone, to their bank, normally the bank will only finance 75 to 80%, and the business has to come up with 20 to 25% down payment for the building. So let's say if it's $1 million building, they've got to come up with $250,000 in cash. Under this program, because it is a participation program where the bank does the first 50%, we do the next 40, the client only has to put in 10% down. So now they can finance the same building with only $100,000. They're allowed to put in some of the soft costs, and they're getting, on our piece, they're getting a nice low interest fixed rate for the 20 years. So they're getting some guarantee that for 20 years that rate's going to be fairly low. So it's a very attractive program.
And all of these loans are secured by real estate, so that, like, if I say owned a trucking company or something like that, and I wanted to buy 20 pieces of machinery, but I had, retail space available, that I operated it out of, would you securitize purchase of a fleet of trucks? Or
well, actually, trucks are one of the few things that we can't do under the 504 program.
Okay.
Because they're considered rolling stock. They kind of have a tendency to drive away, so we can't do trucks.
That's why they're called trucks.
But yes, we do. The collateral for these loans is usually the building.
Okay.
Or if it's, say, a printing press, it would be the printing press. And that's the larger program. Those are the loans that we can do up to $5.5 million.
Okay.
And when we're doing $5.5 million, that's like a $13.75 million project because we're only doing the 40% of the total. So those are fairly large projects. But our small loan program, the whole collateral situation is a little bit more fluid. How we look at collateral. So.
Now you also have a microloan program.
Yep.
That starts off with what, as little as $1,000?
We could make a loan as small as $1,000, and then the cap on that program is $50,000.
Up to $50,000.
Right. So the ideal, the business coming in for that type of financing might be a startup, small mom and pop shop, maybe a home-based business, somebody that's leasing a small storefront, or perhaps an existing business that for one reason or another doesn't quite meet the bank's criteria and guidelines. We don't compete with the banks in many situations. The banks are our best referral resource, so we get a lot of our referrals from banks. So we're able to step in and help those existing businesses that the banks can't or won't.
So let's say I've been running a dog grooming business out
We
of
get
my
a lot of
home
those.
for
Yes.
Yeah.
3 or 4 years, and now I have an opportunity, business is good, and I have an opportunity to purchase a building, or would you get involved if I had the opportunity to lease that building?
Right. For the microloan program, it would be more for somebody that's getting into leased space. But the
Okay.
microloans are also used for people that already own their commercial property, but they aren't able to get the financing from the bank. Like if an existing business needed additional financing to hire more people, or they needed to purchase additional equipment and the bank wasn't comfortable doing the deal, then we could do it under the microloan program up to $50,000. But you were asking about the collateral, and we're looking at personal assets. If somebody doesn't own their commercial property, then we resort to personal assets as collateral for the loan. We'll certainly take the equipment, but we're also looking at personal real estate for it to be guaranteed by personal real estate. So if somebody owns a home, we're going to be taking a mortgage position on it as collateral for the loan.
And you would look for basically 100% of that value. So if I was borrowing, if I wanted to borrow 50,000, I would have to have 50,000 in equity in my home, or
Right. Well, a combination of both business
Between the
and
two.
home.
and the cash
Yeah.
flow probably
Right.
factors into that too,
Right.
right? So I mean,
Yes.
it's a tremendous opportunity.
Yeah.
Oh, it
Yeah.
absolutely is.
How's the response to that?
Well, not enough people know about it, we feel. I mean,
Today's
yes.
the day that all
Yes,
changes.
Yes, not enough people know.
Yes.
Because one of the things that we do, by not being a conventional lender, is that we can actually take a look at someone who has a small business. Let's say they need some money for working capital, because our small loan program is very flexible. So you can use it for a number of different, needs that you have. We can actually take a look at the entire household income that's coming in. If there's a spouse or significant other bringing money to the household, we can look at that when we're trying to figure out if there's enough money coming in to repay the loan. Whereas a bank is going to look at the small business, and if the small business had a small loss last year, and if there's not enough cash there to repay the loan, it's a no. Whereas we can look at beyond that. We can go beyond and say, okay, this is the money coming into your household. You really don't need to take a salary out of your business right now. Things are tough, so you don't need to do that. You can actually repay the loan from that because you have someone else that's paying the mortgage, paying the rent, paying utilities. And so we can be much more flexible on how we look at the loan repayment. And also the collateral, because the bank, whether you for example, if you wanted to take a line of credit on your house for your business, to use for your business, right now the bank is going to be looking at 80% loan to value, or and it's the days of 100% financing are gone, and you may not have that equity in the house anymore. The appraisals the values are going down, so it's much tougher to get money out for the business.
Now the underwriting standards, I know that in years past, when times were good, if a business was taking a paper depreciation, say they bought machinery and they were doing a 27-year straight line depreciation on that, even though they might be showing a paper loss, back in the good old days, the lenders would factor back in a paper loss and not and not consider it an actual loss. Do you guys have that degree of flexibility in your underwriting when you're looking at a deal?
Depreciation is always considered back into cash flow. I mean, I think banks still do that.
Okay.
The problem is that if you start with a loss, let's say you had a loss this past year and maybe you had a loss the year before, your loss is already taking out any cash that you have available, but your depreciation is always counted as money available to repay a loan.
Okay, well that's good to know.
Yeah, we do that.
That's
we
good
also even take into consideration things like the interest that you're paying on existing loans. If you, for example, are paying for an automobile, we give you credit for that, for your own vehicle from the business, because you're using it for business and personally. So we take a look at everything. We really do. We kind of massage it to
Or
death.
if there's been one-time expenses for one reason or another, where the business has had something happen where they had unusual expenses that they had to pay out, then we can take that into consideration as well. So
yeah, because we figure that that's not going to happen
It
again
won't
the
happen
coming
again.
year. That's something, a one-time expense, so we put that back in as money available to repay.
The flood hit, and we hope
Right.
it
Yeah.
doesn't happen for another 100
Right.
years.
Right.
How about, what do you see as the picture for manufacturing in our region? I mean, are we as bad off as Detroit?
Oh goodness, no.
You know, I mean, are there people still looking to expand manufacturing and?
Well, if you're looking at manufacturing on a macro scale, manufacturing as a whole, in terms of total employment, has been going down for several years.
Right.
And I mean, that's nothing new. I mean, every year employment in manufacturing has been on the decline. Now, with that being said, Massachusetts actually has a number of manufacturing industries that actually are quite strong. You know, a manufacturing that's related to growth industries is doing very well and has had a rebound. I'm not sure that Detroit has had an enormous rebound yet, but they actually also have had some too, because they're now also
in the high-tech sector, I would
in
imagine.
cars. I mean, they're actually building some cars too. You know, I mean, they
I hope so.
Yeah.
We lent them enough money.
Yeah, exactly. So, but manufacturing, we're going into a knowledge-based industry. I mean, that is the future, and I think that the manufacturing that you see is actually more sophisticated, a lot more sophisticated than it used to be, which is why it's so important to have better educational attainment for our kids.
Absolutely.
Yeah.
I was just going to say that we're coming up against a hard break for a couple of PSAs, public service announcements. Please don't go away. We have a lot more coming up for you on Let's Talk Real Estate.
Some things require experts at every stage.
It's one small step for man, one giant leap for mankind.
Others are more just a matter of taste and preference.
Just the way I like them.
Buying a home falls somewhere in between. That's why you should visit HomeLoanLearningCenter.com for expert guidance. A website where you can learn just how you should go about buying a home. You'll get facts, tools, and impartial advice. From seeing a lender to settlement and beyond, there's a step-by-step explanation of the process. All at HomeLoanLearningCenter.com.
Houston, we have a solution.
Think of it as mission control for buying a home. That's HomeLoanLearningCenter.com.
This is a message from HUD, the U.S. Department of Housing and Urban Development.
Can you afford your home loan? Could your mortgage payment increase in a few months to something you can't afford? Hi, I'm Ruby D. If you're not sure you can continue to make your mortgage payments, call a government-approved housing counselor in your community for free and confidential help. Keep your home. Know your loan. Call today.
Call 877-HUD-1515. That's 877-HUD-1515 or go to HUD.gov.
Hi, welcome back to Let's Talk Real Estate. I'm still your host, despite popular demand, Charlie Flannery, and my guests are still Maria Gooch-Smith.
Good to see you.
And Laurie Reynolds,
Driscoll.
Laurie Driscoll, that was her maiden name. And we were starting to, during the break, talk about some of the interest rates that you guys offer and how competitive those are. Can you share some of that?
Yeah, and I'll let Laurie talk about the detail, but the one point that I wanted to make is that although we are doing non-conventional financing and often taking a little bit more risk than the bank would, our rates are quite competitive. And I did talk about the 504 program earlier, which is our largest program, which goes up to $5.5 million for buildings. And that's at 5.7 fixed for 20 years, which is a very nice commercial rate, fixed.
Nice, yeah.
And the small loan programs, I'll let Laurie
Carrying
tell you.
a 6% interest rate right now for the microloan program, which again goes up to $50,000, and then we have another in-house loan program, the revolving loan fund, that goes up to $200,000, and that carries a 6% interest rate as well, unless we're partnering with a bank. If it's a situation where we're working in conjunction with a bank on a loan, then we can bring that percentage down to 5%.
Wow.
So, and the loan term on the small loans is up to 6 years, and then the larger loans up to 200. We can do maybe a 5-year with a 10-year amortization, or a 10-year with a 20-year amortization if we're using it towards maybe the purchase of a small, to help someone buy a small condo where a bank is doing a piece and we're doing a piece.
What you referred to earlier as the gap.
Right,
exactly.
Right, exactly.
So I mean,
and that's fixed. Those interest rates are fixed.
No prepayment penalty on those programs.
Okay.
So it's definitely an attractive.
And in some of the larger programs, where those are 20-year fixed, aren't they?
Right. Yes. The 504 program, which is for the buildings, that's 20 years fixed.
Okay.
Right.
If it's being used for equipment, then it's a 10-year.
Right.
No, on the 504 program.
Okay. And you mentioned earlier the possibility of a business consolidating other credit card debt or other debt that they may have?
Right. Right. Do you want to talk about that?
Yeah, sure. One of the main uses of our microloan program at this point in time, because probably starting a couple of years ago when people were finding it difficult to get financing, it was much easier for them to pull out a credit card in order to maybe pay their vendors or to buy their whatever the situation was. They were, or even pay their staff or pay their monthly bills. They were using plastic to do so, and with the rates, they started to rise quite rapidly. And if somebody puts themselves in a situation where they even make one late payment, they're looking at a default rate from anywhere from maybe 28 to 32%. So we can actually come in and at the 6% rate refinance that credit card debt. So at least it enables the person to know that within a 6-year period they're going to be able to get rid of that debt, because otherwise they would just be paying on interest every month and they'd never get rid of the debt.
Yeah. Now, what factor do FICO scores.
The credit scores, right?
Yeah. What factor does that play in an application?
They're pretty important. You want to get into
right.
that,
We
Lauren?
have. I mean, that's basically the first thing that I do when a loan application package comes in, is we have to run credit in order to see if the individual meets our credit criteria. And we are more flexible than a bank or a credit union would be. We'll look at anybody with a credit score of 600 or above.
Oh, okay.
However, what we're doing, because that's pretty low,
yes,
but what we're going to be focusing on is the last 24 months to see how they've handled their debt, if they've paid everything as agreed and on time. If they've had a blip here or there, then most likely it's something that we can get beyond. But if they've had a string of consistent late payments, then that's going to be a problem. One of the things that we're running into now is a lot of individuals on their mortgages are going through loan remodifications. And in order to get your mortgage put into remodification, you have to be late with your mortgage payment anywhere between 4 and 6 months. And unfortunately, I don't think these individuals that are going through that process, even though it's something that they have to do in order to be able to hold on to their houses, they don't realize that it's going to affect their future borrowing. So folks that have gone through that process, it would be difficult to be able to provide them with financing. But if somebody's got borderline credit, we also give them the opportunity to bring a guarantor or a co-signer in with somebody that has strong credit, that's willing to sign on the dotted line for them and step up to the plate if they have difficulty making their loan payment. So that, again, shows that there's more flexibility there. And if somebody's declared bankruptcy, we will look at anybody that's declared bankruptcy, but it has to be discharged for 5 years.
5 years?
Yes.
Okay.
Yeah.
That lets me out. I was going to go for that $5 million, you know?
And actually, the best predictor of whether you get repaid on a loan is credit scores. I mean, it's, you know, people, why do you rely on credit scores so much? Because they are really a good predictor. I mean, if you, the lower the score, you can see you run into problems and you have to call people. And, you know, we like to get paid too, because if we don't get paid, we can't help the next person. You know, we have only so much capital, and if we lose a lot of the capital, we're out of business, just like any other business. So
it's like my mother.
Yeah.
Her credit score, she's 85. Her credit score was up in the high 800s.
Yeah.
Right.
Because she pays people she even suspects that she owes. You know?
We like those people.
Yeah, that's old school. That's just old school.
I should have her talk to some people I know.
Are you hiring? I could. It'd be nice to get around the house a couple of days.
For us.
Absolutely.
I would love that.
Absolutely. Yeah, she's very much into micromanagement.
There you
so
go.
she could be very helpful.
Yeah, some people don't realize how important your credit is, because it really does tell us a lot about how you handle, you know, your debt obligations, and it's really an important thing. Yeah.
What do you see going forward over the next 3, 6, 9 months, the next couple of quarters in our section here of southeastern Mass and parts of Rhode Island.
Yeah.
Are you bullish? Are you bearish?
Well, I guess I'm an optimist at heart, and I do think that this is the year that we're turning the corner. I think we have started to turn the corner. With that being said, the first quarter of this year, between January and March, was actually pretty slow for us. I mean, I think Laurie was pretty busy with the small loan program.
Yeah, I've gotten a lot of response.
But the larger loan program, which deals with the buildings, people were kind of on the fence. Do I buy now? Do I wait? You know, people were a little nervous. And honestly, I don't think the weather helped at all. I mean, we had one of the worst winters, I think, that I can remember. You know?
Oh, God, please.
But things are picking up. We see that, you know. Spring is here, and you know, people are coming out of their, you know.
They have their tax returns a lot. They have their tax refunds. A lot of people wait until they get their tax refunds back, and then they stay, because usually there's an uptick come April.
Yeah.
With activity.
Yeah, I've noticed it myself in the past couple of weeks. It was such a long, cold winter.
Right,
you
it
know,
was terrible.
I never thought it was going to end.
Yeah.
Right.
You know, but I think going forward, you know, there has to be a lot of pent-up demand. There has to be.
Yeah.
You know, I mean, that's what made this country so great. Someone's thinking about starting a business or expanding their business. It's just that they haven't been able to put the pieces together, or, you know, there are compelling economic reasons to dissuade them from doing that. But I think as more and more of those clear out of the way, we can all start to get back on a more secure footing.
Yeah,
I just hope it happens sooner rather than later, you know?
Yeah. No, I think this is the year where, you know, the economy will be growing again, and people will invest and do things and expand.
So 2011 is going to be a big year.
That's it. I mean, I don't know how big it's going to be, but it's definitely, you know, it's definitely going to be better than last year.
Big. You heard it here first.
Big year, yes.
Big year.
Yes.
This is a news flash from World Headquarters, an independent nation. We have a big year coming up for 2011. And these are just the two ladies that would like to assist you. You know,
absolutely.
We were jokingly referring about you guys hiring my mom. only half kidding. I'd like to take an application with me. But are you folks recruiting any talent?
Actually, we are looking for a commercial loan officer. We are. So, you know, we actually sent out an email about that, and I think we've posted it on Monster.com, which is the new way to advertise, you know, online. So, yeah, we're looking for someone who has commercial lending experience and some credit analysis background, and to come and join our team.
Well, I wish you well. I mean, I know that you folks have a tremendous reputation. You guys are both very pleasant. I've never gone up there to the headquarters.
We'll have to come by.
Yeah, you should come and visit.
Get a tour of the building.
I'd love that. I'd love that, you know.
It's a great old building.
You're just right up the street. Now, do you go out to people's places of business or to their home, or do they generally come to you? How does...
Laurie
kind of depends on, it sort of depends on what loan it is that they're applying for. I tend to get the most loan applications in. Unfortunately, I have to decline quite a large number of those applications. I think we figured it out, and I'm looking at about 6 loan applications for every one that I'm able to do. So it's sort of impossible for me to go out and visit every single business owner. But if it's somebody maybe that a bank is working with and they think that it's really a viable deal, then I'll certainly go out and I can meet with the bank. A lot of times banks will call me and maybe do a conference call if that individual is in their office, or I can go to the bank to meet with that individual. We also have very strong relationships with our resource partners, such as the Small Business Development Center Network and SCORE, which is Counselors to America's Small Business. I think
Service Corps of Retired Executives.
It used to be, right.
Yeah.
Oh, they changed their name?
They changed it to Counselors to America, and now they're changing it again, but I don't remember what it was. But anyway, we have strong relationships with these people, and they refer a lot of folks over to us too. And if it's somebody that they've been diligently working with and providing technical assistance to, then I'll meet with them at the point when they're ready to move forward with a loan application, when they've got everything pulled together. People come to our office as well. I mean, we're right on at 80 Dean Street, right on Route 44. So we don't get too much walk-in traffic, but they certainly can come in, and we'll sit down with them, either myself or we have a part-time business assistance officer that works a couple of days a week, and he does that. He does a lot of screening for me. So
yeah, he's a former community banker and has a lot of experience dealing with small businesses.
The community banks, I mean, really, they've kept this whole economy going
Yes, that's true.
by their willingness to invest and you know, take a second look. Well, they tend to portfolio.
Right.
For those of you at home, that means they hang on to the loan for a while, usually season it, collect payments for a year, and then sell it off and hope for the best. But how volume-wise, as far as dollar amount, how are you seeing this year shaping up versus last year, versus 2010? Are you?
Yeah, I think it will be a better year. I mean, when I say it will be a better year, I think we probably will end up, we're certainly on target to do what we did last year, but this is the slowest part of the year. So I think that we probably will do better than last year's numbers, and I think we ended up doing 112 loans last year altogether,
Okay.
So I think we'll probably do that or better.
Because Laurie had mentioned, I think you were referring specifically to the microloans that only 1 in 6 was getting approved. That's
Yes.
about 16 to 17% approval rate.
Well,
Are you finding the same amount in the 504 program?
No,
or is that much higher?
no. The 504 program is totally different, because what happens with 504 is usually you have a business that
There's
has a banking
resources
relationship.
and-
They have a banking relationship, and they usually go to their bank and they say, you know, I'm thinking about buying a building, or I want to construct a building, or I want to put on an addition to my existing building because I'm growing. And the bank often will say, okay, you know, if you can do it conventionally, can you put 20 to 25% down? You know, they might do it conventionally. If not, they might say, well, why don't you look at the SBA 504 program, and this is how it works, and they usually bring us in.
they have a higher success rate than I do.
Yeah.
Okay.
Yeah,
well,
so we're basically looking at people that are already thinking about doing this, and they're thinking about it because in some cases they're saying, my gosh, I'm paying this much rent or lease, and there's a building going up for sale, which, you know, prices have come down a lot. So I can buy this building for less than what I'm paying for rent. And, you know, so there's a lot of that going on, and so it's a different scenario.
There's, you know, I really wish that we had another hour at least to talk about the things that we really need to use to fill in the blanks. But if you'd like, you can go on your computer, go to SEED.com.
SEED Corp.
I'm sorry, SEEDcorp.com, and you'll go to their site. Very interesting. You can make contact with these ladies and perhaps take it to the next step. And also you can send in an email to Let's Talk Real Estate at Verizon.net, and I'll forward those questions to the ladies for you. If you'd like a free copy of today's episode, again, you can send in an email to Let's Talk Real Estate at Verizon.net. Please include your name, address, and your phone number so that we can verify. That's for the first 100 respondents only, because we can't afford to do this all day. Ladies, I'd like to thank you so much
Thank you.
for
Thank
your
you
time.
for having
Thanks,
us on.
Charlie.
Thank you very much. Thanks for tuning in to Let's Talk Real Estate. Be well, and we'll see you next time. Thank you.